So first we have Mr. Takao Seki, who is the Director General of the Japanese External Trade Organization in Addis Ababa. Mr. Seki has served as the first Director General of this organization since March 2016. Then we have Ms. Eleni Kiru, to my right. She is the head representation to Ethiopia and the African Union European Investment Bank. On the panel also is Mr. Zemedene Ngatu, the Global Chairman, Fairfax Africa Fund. We also have with us Mr. Chepelai Kabata, who is the Technical Advisor to the Director General of the Arab Bank for Economic Development in Africa. Following, we have Mr. Michael Muwonge, Country Manager and Director, Financial Access Commerce and Trade Services, Uganda. And then there's me, Henrietta from Lagos Business School. Right, so today we're going to be talking about financing for development. As we know, AFTA is an exciting exciting development for many people because it's promising a market size of 1.2 billion people with a combined GDP of $2.4 trillion, which will make it practically the biggest market on the continent, well, second largest market apart from Asia on the continent. And so that's good news for everybody. But the question is, what's the reality right now? There is a crisis of implementation, and I think that as we begin to discuss finance for development, we need to keep these challenges at the back of our minds so that we invest in ways that ensure we achieve our desired outcomes, okay? So, the things to consider include governance guidelines, okay? What will be the tax regimes for trading across countries? How strong is the legal, regulatory, and regulatory framework for resolving inevitable disputes that can occur as we trade across the continent? The national policies in place, do they encourage intra-African trade? Infrastructure. We know it can be quite challenging to move around in African countries, talk less of amongst different countries. So we need to look at the quality of infrastructure we have to facilitate this trade, because transportation is one medium that actually makes a huge difference in the way trade is facilitated. And then again, how well do we know each other? How many of us are familiar with the culture and the way of life in the different African countries? Because ignorance leads to fear, and fear leads to lack of trust, and lack of trust also hampers trade. So these are some of the challenges I'd like us to keep at the back of our minds as our panelists tell us how they plan to help overcome these challenges and facilitate finance for the development of this great initiative. So I think I'll just start with Mr. Takao on my left, who'll just tell us what his organization does and how they are planning to connect with the goals of the African Continental Free Trade Agreement. Thank you.
Thank you very much, Dr. Onwegwegie, and then also thank you very much for giving me these opportunities. And then wherever you see the Japanese in this kind of panels, and then they always start with apologies, and then as a typical Japanese, I also start with apologies. I work for the Japanese government agency, but not the government itself. So whatever I say, I mean that what I say include opinion that belongs to me, not the government. Well, my organization, JETRO, or Japan External Trade Organization, is not the financial arm, but the business promotion agency. My organization is in a position to support Japanese company and its counterpart in Africa. We provide accurate, credible information for their decision making and the business crews and the connections for smooth implementation. We are kind of the eyes, ears, and the mouth, and either hands and feet for Japanese private sectors. But our activities are always aiming at mutual benefit. So we are happy to share our views and observations with our host country and our partners, especially the 9 countries in Africa, well, actually the 8 countries in Africa, and then soon we are going to open the office in Ghana, so it becomes 9. We have where we have an office, that you can take advantage of our existence to create strong linkage with Japanese business sector. We are also happy to work for you, women-owned business, young entrepreneurs, and the SMEs to make business matching with Japanese companies. Well, let me introduce something what we do in recent years. In our latest effort, good attention is paid to African startups. We organized a pitch event during the TCAS 7, and it was a joint program with the incubation hub in Nigeria, CC Hub, for their recruitment process for Asian pitch tour. We recommended the prominent startups from different African countries and organized a pitch and a matching event in Japan. Attracting venture capital or corporate venture capitals are the one way to give impact on society, because they can invest quickly in African startups and youngsters. You can observe Japanese companies investing in the startups in the countries such as Nigeria, South Africa, Kenya, Rwanda, Tanzania, and so forth, in the sectors like logistics, off-grid, and insurance, etc. The huge companies are already involving themselves. SoftBank, Mitsui, Mitsubishi, Marubeni, Sompo, Toyota Tsusho, Yamaha are just a few to name. We would like to create more case for mutual benefit. But please do not misunderstand that focusing on startups does not necessarily mean we forget about the other important sector, including manufacturing. We pay due attention to the conventional type of investment as well. Japan is good at manufacturing, as you all agreed, I guess. So in fact, Japanese companies are largest foreign investors in terms with the number of employment in some of the countries in Africa. Do you believe that in South Africa and Morocco, we are the largest employment creator as foreign investors? Thanks to Toyota Motor Corporation in South Africa, or Sumitomo Denso or Yazaki in Morocco. Yeah, okay, I'm going to wrap up. So manufacturing is still on our focus. And let me briefly touch upon in the context of the African free trade, African Continental free trade agreements. Definitely from time to time, the usage rate goes up. From our experience in Asia, for example, in ASEAN countries, let's say, at the initial stage when the FTA was installed, the usage rate was just a few percent, of course. But now the Japanese companies working in 4 ASEAN region use more than around 50%. Yeah, okay. Yeah, I stop here. I definitely predict the same in Africa, and I have figured later on maybe I can introduce. Yeah, thank you.
Thank you very much. Thank you for having us here today. My name is Emeline Ngatu. I'm the global chairman of an American private equity firm that invests in Africa, in fact, more specifically in sub-Saharan Africa. We invest in 5 sectors: infrastructure, the broad sense of infrastructure, which includes technology, energy, and other things. We also invest heavily, and this might sound a bit surprising for people, but we invest in manufacturing in Africa. I know the continent is not well known for being a manufacturing hub, but we're heavy into manufacturing. The other sector we have given a priority focus is agro-processing, not primary agriculture, but converting, say, the beautiful Ethiopian coffee into Nespresso. At least those are the kinds of things. And then the hotel and tourism sector, and finally, natural resources. Our goal, our strategy for investment, we like to think of investment, even though we're a private equity, a venture capital fund, we think of ourselves as impact investors. For everywhere we invest, we create jobs, but not just remedial basic jobs, but value addition. So for example, I am part of a manufacturing business where we export globally from Africa, And in one of our factories has only 3 expatriates from Europe. The rest are Africans. And yet we can compete globally using African talent. So that's the kind of thinking, yes, that's the kind of thinking that we have. All our investors, we raise capital around the world, in the United States, where I grew up, in Europe, in Asia, and lately in the Gulf, the very wealthy oil-producing countries. But all of it is directed for Africa. And the reason I focus on the African continent investing here is there's tremendous of opportunities. Even when we look at agriculture, for example, 60% of the arable land in the world is right here in Africa. And yet Africa imports billions of dollars worth of food every single year. And there's a lot of talent and a lot of resources. So we are trying to leverage, by bringing global capital, global talent, to deploying it in Africa. Now, just wrap up very quickly. One of the things you should keep in mind, why aren't more people, foreigners, investing in Africa, considering Africa is a wealthy continent? I was at the G7 summit not too long ago, where there's the data that I saw that there's about close to $30 trillion of money sitting in negative interest rate accounts. Essentially, people are paying their banks to hold on to their cash. Okay? Actually, 22 trillion in negative and 8 trillion in accounts that earn less than 1%. And yet, last year, Africa received only $50 billion of foreign direct investment. So that we're trying to bridge the gap between the risk perception and the realistic opportunities in Africa. And that's what Fairfax Africa Fund does. As I said, we're based in Washington, but our hearts and our business is right here in Africa. Thank you.
So I'll move very quickly to my right and introduce Mr. Chepelai, ask Mr. Chepelai Kabata to tell us what his organization is doing with respect to the agreement.
Well, thank you very much. We guys at BADEA, the Arab Development Bank for Economic Development in Africa, what we have done for the last 44 years was to finance development projects across the continent. So we finance projects from infrastructure, essentially, from transport, water supply, potable water especially, social projects from health to education. And very recently, BADEA has expanded its portfolio to the private sector. So in that respect, we also created a trade facility to encourage trade between African countries as well as non-Arab African countries with the Arab world. So what I would like to emphasize on for this audience is starting from next year, BADEA will be implementing its 2030 strategy. So with this strategy, we will continue with infrastructure. On a private sector, we expanding more. We're gonna continue with what we've been doing, providing line of credit to regional commercial banks. We're gonna continue with our trade facility. But in addition to that, very important for this audience, BADEA has made small and medium enterprises, entrepreneurship for women and youth as one of the 4th pillar of its strategy. Another pillar for this strategy is agricultural value chain. And we also consider a 5th pillar, which is transversal, it's capacity development. So technically, with this, the good news for this audience is BADEA is rallying partners to fund innovative solutions to small and medium enterprises, to young entrepreneurs, to access the funds they need, given that some of them got stuck, they are not qualified anymore for microfinance, they cannot access credit to traditional banks, so they got stuck in between. So BADEA is rallying partners to come up with innovative solutions. And one of those is to create a financial institution where this category of entrepreneurs can access to finance at an affordable interest rate.
Thank you so much, Mr. Chepelai Kabata. So let's move on very quickly to Ms. Eleni Kiru. Please, just tell us what the European Union Investment Bank is doing.
Thank you, and good afternoon, everyone. Very happy to be here with you. So for those of you who may not know much about the EIB, European Investment Bank, we are the investment arm of the European Union, which means that we're owned by the 28 member states. And interestingly enough, in relation to what we're discussing here, the EIB came to being in order to support the European countries coming together. And the two words that have been guiding our actions ever since have been one, connectivity, and B, coherence and cohesion. So this is just to say that our bread and butter has been, since we were founded about 63 years ago, since we were founded, it has been to actually help countries gel together under the European Union. And as we've heard yesterday by the EU ambassador to the AU here, I mean, this has taken 36 years. So my message in relation to AFTA is that it's a wonderful initiative. We are ready to support this partnership. Political will is extremely important because at the end of the day, no matter what all of us here do or on the panel, we are operating in the same environment, and that environment needs to carry political will and be an enabling one. But at the same time, we need a lot of patience. Things don't come together overnight. So the EIB has been present in Africa for the last, since '63, for the last 56 years. And particularly in the last 10 years, we have invested around 22 billion euros. Our split is typical of the way we work. 50% more or less went to private sector, private enterprises, another 50% went to public sector, which is to say that we pay a lot of attention of supporting both the enabling infrastructure that needs to be in place, as well as the private enterprises. And by private enterprises, we mean both the SMEs as well as the other corporates that are important players in value chains. To give you a sense of the impact that we've achieved just in 2017, out of 53 projects that we've signed, and 56% share of private sector, private enterprise support, lines of credit have generated about 160,000 jobs, and then all our private equity funds investments have generated another 25,000 jobs. And generally, the access to finance takes the lion's share of our efforts. So 36% more or less goes to access to finance. We have a very flexible toolbox. I'm not going to I haven't got the time to walk you through it, but I'll be very happy to speak with those of you interested afterwards. But in relation to what we're here for, just to take you forward in our thinking. So our thinking is that, first of all, as the unions, the European Union's investment arm, we're here to support this partnership on a win-win, with a win-win approach. It's not, it has to be a partnership, and I think we, both blocks stand to benefit. There are 10 points that I would like to just mention that will guide our way forward. And our way forward for the next 7 years, we have a target of investing 100 billion, of mobilizing rather 100 billion of euros investments in Africa, which is really shooting way beyond what we've been traditionally doing so far. So within this target, mobilizing 100 billion in the next 7 years, we are aiming to invest in key infrastructure, develop private sector and banking. Private sector and banking sector is fundamental for SMEs. You need to have that liquidity, and you need to have possibility to take more risk. Support industry champions, those who are the pioneers and who take the risk. Help people connect. Connectivity is above all. Prepare for climate change. Support women's economic empowerment. You can't do this just with 50% of the population. And very much also support rural areas, diversify away from just subsistence, but to semi or full processed products. And finally, very much work with the Union, with the European Union, in terms of supporting governments, putting in place the right regulatory and policy frameworks that will help make this happen. Thank you.
Thank you so much, Eleni. That was quite insightful. So let's quickly move on to Mr. Michael Mwonge to share with us what the Financial Access, Commerce and Trade Services is doing in Uganda.
Thank you, Madam Moderator. Everybody has a role to play in as far as AFTA is concerned. We've had the European Investment Bank, we've had someone from Japan, but then we as the people in the continent have a role to play for this to work out. Mm-hmm. I come from FACT, this is Financial Access, Commerce and Trade Services. We do supply chain finance. We began as an advisory company to banks and SMEs, but in 2013, we signed a PPP agreement with the government of Kenya, having gone through the drought that hit Kenya around that time. Research showed that agriculture is still lying low because commercial banks are reluctant to go there. Reason, high risk, low return. Nobody wants to go there. When we did further research, we realized that we need to encourage banks, which we did. And 4 years down the road, we had such meetings. We sat with bankers, we told them how to go about it. They didn't do it. So we got some seed capital from the Dutch government, and they asked us to do it ourselves. So we started FACTS, and we said we will work with the agricultural sector. Now you'll agree with me, ladies and gentlemen, that most of our SMEs are struggling because they don't fit in the value proposition of commercial banks, and we keep sending them there for finance. People out of Europe are sending money, help agriculture, but money stops at commercial banks. So when we looked at this problem, we realized that we don't have a magic wand that is going to solve the problem. But we carried out a research that showed that SMEs in the agricultural sector don't live to see the third year of their business because of late payments. Someone grows maize, they harvest, they package, and when they deliver to the off-taker, they are told to come and pick money after 90 days. These guys have little capital. Means their business is tied. So at FACTS, we say SMEs should be able to access finance, not only basing on their collateral and financial power, but because the value chains they are working in have stronger people on the other side. We've been doing this business for the last 3 years, up until early this year, when Factor Chain International allowed us to join them. This is the world governing body of factors. Now this means that we are able to facilitate international trade, not only to those who have the required collateral that the banks require, but by those who have bigger off-takers across borders. With Factor Chain International, we'll be able to advance you money for what you have exported without recourse and be able to collect from the factors in the countries that we have partnerships in. So we are here to say that as the trade zone takes shape, we need to get the alternative sources of finance, like factoring, which will enable SMEs be able to transact across borders without going through the hassles and bustles of traditional commercial banks. Thank you.
Thank you. Thank you very much, Mr. Michael Mwonge. I like very much the fact that you are reminding us that we as Africans have a strong role to play in ensuring that this happens, in spite of the fact that many people are willing to support the process. Obviously, we're not going to reinvent the wheel. So if the EU has been through this and it has taken 35 years, it will be good to know what the challenges were and how they overcome them. So we build on their experience, leverage on that experience to accelerate the formation of the Continental Free Trade Agreement. We don't have too much time for another round of questions with the panel, so I think I'll just throw this out to the audience in case you want to ask any questions. Yes, we have many hands up. Okay, so we have 1, 2, 3, 4. We have 4 hands up for now. Can we have the microphones, please? So, you have someone there? Someone here, and then someone here. Okay, you wanted to ask for it. Okay. And then
all right. Thanks, ma'am, and thank you very much for the panelists. My name is Nomvula Makhotlo. I'm from the government of South Africa. I would like to talk. I think the gentleman from Uganda is talking about agriculture getting almost a raw deal, you know, in terms of funding from the traditional funding institutions. But mine is to say women and young people are actually getting a raw deal from traditional funding institutions. Funders don't trust women, and yet women are paying, better. You ask people who are in the funding space, they will tell you. And yet they continue to get a challenge in terms of accessing funding. Same applies to young people. They don't have track records, nobody's trusting them. So I want to know, I think two people from your panel, ma'am, they said they are focusing on entrepreneurship, young people and women. I would like to know what programs are they having, and is there any track record? Have they funded women? Have they funded young people? And how do they see themselves ensuring that young people and women participate in after and through the access to funding?
Thank you very much. Okay, yeah.
Thank you. I am Debbie. I'm also coming from the South African delegation, and I am into agro-processing, specializing in peanut butter and nutty butter that are related to nuts. And my question is specifically for you, sir. I don't do coffee, but I'm getting there. My question is, like that gentleman said over there, wherever I go, I'm told I'm a high risk, and my margins are low, and it's true, they are very low. And the other challenge that I have is we have so many exports that we're taking from Europe in terms of butters coming into Africa. And yet in Africa we have got full resources, 60% of arable land, that is peanuts are grown here. But the challenge that we are having to export our products to your countries is all because you are bringing us already the things that we have. Now, how does such a woman get funding from you?
Mm-hmm. Okay. We'll have another round of questions. Another round. Is there someone here?
I'm called Lucy Namwiru, manufacturer of sweaters. I'm the best knit of sweaters in East Africa. My company is Luna's Enterprises Uganda Limited. I started the business as a small entrepreneur with 3 machines. Now I have about 10. But one of the challenges we have, we ladies, is that in Uganda, we have a lot of ladies who are entrepreneurs. But we have a problem of getting finance. You go, for me, I make school sweaters. Sometimes I get orders. You go to the bank, they charge you 29%. You have to import yarn from Nairobi. Women, you have that problem. We have tried a lot, the women of these days. Can you create us a women's fund where we can access money at the little interest? There are so many local women there who doesn't know even English, who doesn't know, and also to organize for us trainings. Ladies, we are active now. Because for me, I'm happy as a lady. I'm the best knitter in East Africa. As a lady, I'm happy for that, but I have tried a lot. One day, through She Trades, I went to South Africa. The guy for the pep stores came to my store. He saw my sweaters, he liked the sweaters. And then he sent me a letter so that I can tell him what I can produce. But I just turned it down because producing sweaters for pep store, in our governments, nobody to help you. Wherever I go, people, they come, they're helping you, but they are not helping you. Others, they want to buy shares in your company. Well, they want to turn you down because they have a lot of money, so that they can take your what? Your business. How can you solve for us, especially women? Because men, you have collaterals, for us, we don't have them. Thank you so much.
Thank you very much. So we'll just take the last 2 questions here, and then, so there's a lady here and a guy behind her. Yeah.
My name is Olushola Elizabeth from Nigeria. I'm into food processing. Well, I'm still on collateral for women. We've been taught to put our records together. We have good documentation. I was referred by She Trade to Growing. I was able to scale through the first stage of approval. But when you go to stage of disbursement, I have to have a structure, like a building, to be able to assess the finance. So my question is this: what are you doing to be more flexible about the collateral issue. Thank you.
So we have a final question behind. We'll come back to you.
Thank you. My name is Kamachi Sejuta. I am from Ethio Green Production and Industry PLC. We are in the food processing, and we are exporting to United States and different countries. My question for you guys, apart from finance, nowadays as African food producers, we need certification, international standard certification, like FISMA, for example, Food Safety Modernization Act, ISO 22000, which is quality matters when we want to export our standard, you know. And for that, high financial and expertise is needed. Is there some kind of allocation for finance apart from giving in cash?
Okay.
You know?
Right. Okay. Thank you so much.
And the second thing is that many of the users, you know, once you have been given focus, or the women's, you will be attended, you are under the radar, you know. But there are several users and the women's who are in the rural areas who do not have access and internet, you know, just like me and other fellows, you know. What was an emphasis that was given, and what kind of financial sourcing was thought about them to be given to them? Because 85% are agrarian and Africans are, you know, farmers, most of them. Those needs access to finance and they want to transform their life, and we are not supposed to forget them, and I want to say thank you.
Right, thank you so much. Right, so maybe we should just try to answer these questions. They're quite similar. The whole point is we have institutions here that say they are financing SMEs, and we have SMEs here saying there's an absence of finance for growth. So let's hear from panelists why you have provided finance and the SMEs are saying they don't have access to finance.
I'll try to answer the couple questions that are directed to me. First and foremost, I mean, you remember I said the risk perception of Africa sometimes far outweighs the realistic risk on the ground. So the first thing that needs to be done is rebranding Africa is very important. We start with a macro picture. If the investors, as I said, are paying their banks to hold on to their cash, as opposed to coming in and investing in Africa, we need to acknowledge there's a problem here, yes. Right? So we start with the macro, and then we bring it down to the on the ground level. There are two things. Startups, by definition, are risk, very high risk, where I live in the U.S. or anywhere else in the world. So, and then when you bring it down to startups in Africa, and then a woman's startup company, the risk gets exploded. So, one of the suggestions we had, it can't just be the private sector funding these companies, right? It has to be a collaborative effort between governments, development financial institutions, and the private sector working together to mitigate the risks. I like this idea about the peanut butter, right? I mean, I can give you a million examples like that where we import in Africa from the developed world, or even from the desert in the Gulf where we import juice into Africa. I mean, right here, even in Ethiopia, right? I was telling a story recently. I was in Paris, on the main street in Paris. It's called Champs-Élysées. On Champs-Élysées, this is massive, very gold-edged store as big as this, and you would think it's a Louis Vuitton store or a gold store. No, it's Nespresso, owned by Nestle. You walk in, a lot of the coffees that are sold there that can help pay the rent for that kind of place is African coffee, Ethiopian coffee. And so we first have to figure out a way, how do we monetize, how do we capitalize? And I think the risk perception part of it has to be addressed collaboratively. It can't just be the private sector doing that. We do venture capital. We look at about 100 deals a year, we might do one. On the private equity side, again, if we look at 100, we might do 3. So that means there's a lot of competing interests. I mean, the money has to returns to investors, right? And it's not charitable money. So it's incumbent on people like you also to be passionate and sell your vision, your idea to the investors, but your government, whether it's South Africa or here or anywhere else in Africa, has to be part of the process, and bringing in the DFIs who actually are mandated to finance people like you. In that case, all of us working together, I think when we can increase that 50 billion I talked about to 100 billion or 200. 50 billion is nothing. okay? For the size of the African economy, the dynamism of the entrepreneurship in Africa, I think 50 billion is nothing, considering that they're $30 trillion, that's American dollars, 30 trillion sitting doing nothing.
Yeah.
So we have to work on the risk perception in the first place.
And if I may just add, time is up. Okay, so we have to go very quickly. If I may just quickly add to that, because some innovation has already started in line with that. So what some banks have done in Nigeria is to de-risk SMEs by putting them through a training. So when you're certified, people see you as less risky. Remember, you don't need money to start. What you need is training. And once you have that training, then your risk perception goes down significantly, and then you can get the money you need to grow. So let's think about that. Again, innovation and creativity. So very quickly, I'm being told the time is up. I don't know what you would like to add to this, or she would like to say something about it.
Thank you. I will answer specifically to the questions raised by ladies in the audience. So the premise is that investment is never gender neutral. If we want things to change, we, as institutions or financing platforms, we need to give the right signals out there. So we need to give the signals to the government and to private sector and to the financial sector that what interests us is to actually support female entrepreneurs. What the EIB has done is, first of all, we've realized a bit later, but we have realized that investments are not gender neutral, which is why we've put out our strategy for our investments, saying that A, we protect women's rights, B, we make sure that there is the gender impact, and C, we explicitly invest in women's entrepreneurs. The signals we're giving out, apart from the high-level strategy, is that we have only last week in Joburg, for those of you who were at the Africa Investment Forum, we launched our She Invest initiative, which aims to mobilize 1 billion euros financing female entrepreneurs and primarily financial inclusion through digital innovation and through climate financing and green economy. We are also, we're the first multilateral development bank who joined the 2X Challenge. 2X Challenge is a G7 initiative that actually, the signals we're sending, and I was speaking in Nairobi to banks last month, basically we want to mobilize $3 billion by the end of next year. So the signals we're giving to our clients is, we want gender investments. We want investing in female entrepreneurs, we want to invest in gender impact, we want to reach that target. So we'll be looking for investments that look that. And then we're also doing a lot of work on really sensitizing our financial institution partners across the continent on how they can actually overcome negative stereotypes and negative perceptions that female borrowers carry more risk. It's a perception. Non-performing loan rates, particularly for female borrowers, are lower than for men. Mm-hmm. So I'm just putting it out there, I'm happy to speak about it. Finally, a very important thing on collateral and on agribusiness. Collateral here in Ethiopia, we've signed last year an investment for 30 million to reach female entrepreneurs. And one of the innovative elements of that is we're actually piloting non-collateralized loans using psychometric tests that actually test borrowers' performance, but without having a collateral. And guess what? Not only does the MFI that's piloting is excited about it, but other MFIs in the ecosystem get excited. So it's important to demonstrate what is possible to overcome perceptions and excite appetite. And I'll leave it to that. I have many more things to say, but I'll leave it to that.
Thank you. Maybe
great, please. Okay, we'll come back to you.
Okay, maybe to add on what she has said, it is true, women find themselves somehow marginalized, but allow me say that we are in an era where women are takeoff. My grandmother never owned land. My mother owns land jointly with my father. My wife owns land in her names. This means that society is beginning to appreciate the role women play in business. Mm-hmm. At facts, both in Kenya, Uganda, and Tanzania, we realize that there is a very great gap between investment readiness and then the needs of SMEs. When you talk to most of the entrepreneurs, they will tell you their need is finance. When we did research, we realized that it's not only finance that is quite critical. We realized that many of our entrepreneurs still lack skills in sales and marketing. They still lack skills in operation and sustainability. They still lack skills in financial management. And these are some of the things that are going to be looked at by financiers. I don't know of any financial institution that discriminates loans against gender. It is time that the women in business rise up above their fears. The moderator said ignorance gives birth to fear, and fear gives birth to mistrust. Women, rise up. This is your time, and I'm sure the sky is the limit. Thank you.
Right. A final word from Mr. Chepelai, and then Mr. Takao.
Well, thank you very much. With respect to Badea, as I said earlier, we work for the last 40 years with the public sector, government essentially. But starting from next year, we will expand our operation to small and medium enterprises. But over a couple of years ago, Badea provided what we call technical assistance to promote initiatives, to promote capacity development for small and medium enterprises. I will point out to the Africa Capacity Building Foundation, which benefit from our technical assistance to build capacity for women entrepreneurs in the agricultural sector. That experience has been done in Rwanda and Sierra Leone. Another initiative, but they are promoted recently, we sponsored the Africa SMEs Champion Forum in South Africa, where we help startup with capacity development through intensive courses, and there were also an award for young entrepreneurs. Another initiative, we are in a talk with some of our partners. I think most of you might be familiar with Tony Elumolu Foundation, which has been very, very leading on developing entrepreneurship skills across the continent. So in that respect, Badea is under discussion and will be supporting a pilot project for the Sahel region, and we are looking into Mali and Niger. But starting from next year, we were trying to find innovative solutions to the issue of finding collaterals and de-risking business for young entrepreneurs and women. One of the options Badea is looking into is creating a financial institution that will provide loans to young entrepreneurs who cannot afford to provide collaterals and comply to all requirements from traditional banks. And through that institution, they will be able to access loans at a more affordable interest rate. There is no risk zero business, actually. So one of the things we need to think about is rally with partners and create a kind of a guarantee fund that will help women and young entrepreneurs to access loan and expand their business. So we are very excited to sorry. So technically, Badea is into small and medium enterprises, and we are focusing especially on women and youth.
Thank you. Right, the last word from Mr. Takao, please.
Well, okay, so just briefly, why the reason why we focus on the startups is something related to the question you raised. That, well, the startups often come with a solution with technologies, mobile banking, for example. Well, whenever you find that mobile banking or technology, please do adopt that technology. It gives you the credit history. And also, it helps the financial institution to develop the new facilities. So that is why we are targeting at such kind, how do you say, the role to be a catalyst, not only bringing that investment, but we want to be a catalyst.
Absolutely. Right, I think the message we're getting from the panelists is that women have to know how to not only start a business, but also get themselves investment ready. Anybody who's going to invest wants to be sure they're investing in a growing business. So you need to have records, you need to have your books, and for all this to be in place, you need training. So I think what entrepreneurs need to do is foster, get trained so that you know how to put all these things in place, and when you present your case, you're an attractive investment. Right, I'd like to say a very big thank you to all the panelists who have come from far and wide to share their insights, their knowledge, and I hope it's been useful for all of us. It's been very useful for me to know what they're doing, and let's begin to think about our role in this whole, in making the Continental Free Trade Agreement work out, as well as what's available around us to facilitate its implementation. Thank you so much.